So down the shore, I can actually predict what houses will sell for based on what they're currently being marketed for now. And when they flip into this closed transaction, I can tell you if they started, what the price came down to. And actually, when they're in active mode, I can say that house is going to sell for this number.
Wow.
And so actually other agents at our office down the shore actually call me now.
Rob, what's the number?
They give me the address.
You got to talk to those NAR lawsuit people. Be like, yo, I got some straight up data on the South Jersey shore.
But while we were slow, I built it. Yeah. Right. So we're slow. I'm like, all right, I want to become the expert on
that's cool.
This market. So I know exactly what things are going to sell for. I had a family, my son goes to Malvern and my daughter goes to Episcopal. And, lots of families there own places down there. Yeah. And I've had them come up to me and, their house is listed and it's not selling. And I'm like, well, based on my model, it should be at this number. Mm-hmm. And then like a few weeks later, I see it drop down to my number and I'm like, nice. Good. But someone else listing it.
Right. Welcome to the podcast dedicated to real estate, insurance, and building your business. Join us as we take you along our own business building journeys with additional wisdom from our network of local and national experts. Welcome to Bricks and Risk. Hey everyone, welcome to another episode of Bricks and Risk. I'm Tim Garrity.
And I'm Sean Mooney.
Today, Sean, got another one of your buddies on, and I think it's a childhood friend too, as you were telling me. We have Rob Schuck, the president of North Point 360. How you doing today, Rob?
Good, guys. Thanks for having me.
Welcome in.
Yeah. Sean, it's good to see you.
Yeah, thanks for coming in, buddy.
Nice to meet you.
So Rob is the president of North Point 360, which consists of North Point Real Estate, North Point Lending, and North Point Insurance. Super impressive.
Thank you.
One of the few professionals who is a licensed real estate agent, mortgage originator, and insurance agent, dare we say triple threat, raised locally.
Yeah.
You went to Wissahickon High School, home of the Trojans.
Home of the Trojans, yeah.
Villanova University with a bachelor's in finance.
Yep. And
you're married with 2 kids.
Correct.
Awesome.
Living in Chester County.
Love it. All right, so let's do this. So we were just chatting briefly, as you and I just met. And it looks like insurance came first from you starting your own businesses.
Yep.
And, as Sean would agree, insurance, I mean, again, it's going to keep you plenty busy. But you have lending, you have real estate. Let's go back to that time when you started insurance because you were in the mortgage industry prior.
Correct.
What made you do that?
Well, as we talked before, it was 07, 08, and the mortgage industry was collapsing. It was in complete turmoil.
Awful.
And I just saw that, and I use Prudential Fox and Roach as my example. When I looked at them and their Trident companies and I saw that they had multiple revenue streams, I said, that I have to do that. And at the time I was lending in Remax Action, which was a real large, probably the largest Remax in Montgomery County at the time in Horsham. And there was definitely opportunity for me to continue to build not only my mortgage business, but the insurance business because I was there. Mm-hmm. And at the time, when you look at Remax agents, they're 100% on their own, most of them 100% commission. I found myself being the conduit of sharing information on how this problem got fixed with this deal and this problem got fixed with this deal, because at those offices, that tends to lack that centralized person who helps.
Agreed.
So I ended up growing my mortgage business because I was able to offer all these, hey, this is how you structure this contract. This is how you word this addendum.
Yeah.
And that kind of became my niche there.
Like a problem solver.
Deal makers and problem solvers. That's why I always tell people that we need to be in this world. If you're not one of those, being both of those things, you shouldn't be in the service industry, right?
I agree.
So that's what, for lack of a better term, being on the balls of my ass in the mortgage business, I said, all right, well, what are you going to do? You're going to sit there and throw a pity party, or you got to go do something? So I went and got my insurance license. I called Travelers. I brought them out to the office. I showed Mario that, hey, listen, this is where we're at. I have leads to come in. Do you know Mario?
He was my guy previously.
You guys know the same people when you were starting out?
No, well, the carriers have their carrier reps.
Oh, gotcha.
So then these reps cover territory, and then
the person who represents the carrier, you get to know the person.
They got to give you the appointment.
Gotcha.
You know, right now you try to go out as a new person, get an appointment from an insurance
Got to
company.
take them out to a nice lunch.
Even back then, I mean, it wasn't like I interned at an insurance agency.
Right.
I just was just.
How many years insurance experience do you have, Rob? Starting today.
Is negative
About 3 weeks.
Can you take negative as a number?
Yeah.
Because
No,
that's
that was in one of our early episodes. It was like I laugh about it because I was calling these carriers and I didn't have any funnel of like feeding business in.
Yeah.
And they're like, call us back when you have like a book of business that's like $1 million because we don't want to talk to you.
Yeah.
You know what I mean? It's like you're an unestablished, you're a liability to them.
Yeah.
So their willingness to like.
Oh yeah, he went out on a limb to give us our first appointment.
Yeah.
He really did, and I will always be thankful for Mario.
Fran was my back then MetLife person.
Okay.
Yeah. And I remember her because I'm like, you shouldn't have given me this appointment.
You're like, hey, I'm going to prove myself. Just let me do my thing, Franny.
Yeah.
But I talked to Mario now, and there's startup real estate companies all over the city and other places that are reaching out to him trying to get something going, and it's hard. It's you just can't just have customers. You have to actually know
the business,
what's happening in the business, which is not fun right now. But I think it's getting better. Like all my
where. We just got a letter yesterday. Main Street America done getting out of the business for personal lines.
Yeah,
which is the Kemper move.
How big is that company?
I don't know what the number is, but they were part of AmFam. AmFam's like a big national brand. They're getting out, and usually in a normal market, they'll sell off that book of business. There's not even any buyers.
Yeah. Well, it sounds like, because we've talked about this in a few different episodes. It sounds like real estate it's like a thinning of the herd a little bit. Because people were writing a lot of stuff. They're not making any money. Maybe they didn't, like we had the episode with Harris, and he's talking about, making sure your business is properly capitalized. And there's always going to be companies that get into all industries that are riding the wave of a good economy. We've been in a good economy for a long time, which I want to dive into this topic too with you, Rob, because you've been around for a while. And you were in lending when I was in lending, and now you're in insurance, lending, and real estate. So, depending on who you talk to, the current housing market, let's call it residential real estate. Some people say it's decent, and some people say it's terrible. So it really just depends on who you ask. What market they're in. Are they in a market where they're getting listings left and right, and they all sell for over asking? They're going to say it's decent. Is it the person who focuses on, a neighborhood in the city with tons of inventory and 3 buyer clients are going to say it's terrible? I mean, it can go one way or the other. So how do you think our current housing market developed to get to this point today?
Oh, geez. Well,
I only have an hour.
Cool. Well, it's a couple of different things. So again, it starts back in 2008, right? So if you go back to 2008, you listen to guys like Warren Buffett, they said once the builders started to fold and start running down land, we were not going to build enough housing to keep up somewhere down the road. We probably hit that in 16, 17, right? That's when we hit that mark where it was like, oh yeah, we have these millennials who lost their jobs, right? Moved back in with their parents, did not create households. Problem number one. So now their life is on a little bit of a delayed start. So here comes a generation behind them, full force.
Gen Z.
Yeah, saying, hey, we saw what happened. We were like in grade school when the economy crashed, and we are now adults. So we really focused on when we came out of school, whether it's trade school or college, we had a job.
Right.
We knew exactly what nursing, they were not like guys like us probably went to school and said, well, you study business.
Right. Yeah.
And then when you come out, you do something businessy.
Right.
Whatever that may be.
Totally true.
Yeah. Right.
I can do this. I can do that.
As long as you can pay the tuition or borrow the tuition.
Business.
Yeah. You're going to be doing something businessy.
That's a great example.
So, I looked at that. I called it generational collide. So now the millennials regrouped, got better training, got MBAs, did whatever they had to do. So now they are on a delayed track. So now they're joining this other generation, right? And then we compile that with the fact that our parents' generation are living longer, right? And have paid off their houses and have been always taught.
Aging in place, a lot of people.
Yep, exactly. Aging in place, and their houses are effectively invisible to the market. They're just like, we're not going anywhere.
Right. Where are we going to go?
Yeah, well, even we're going to go. We like it here, and we want to do, like, I've always dreamed about doing photos for that wedding in the backyard, and there's and Christmas is here. They want to still hold on to the holidays.
Totally, man.
Like the baby boomers, our parents' generation is like got a
stubborn
vice grip on everything.
Anything.
Yeah.
Like, I'm not changing it up.
So that's a part of the big problem. You had people not downsizing. Then their kids are all looking for housing at the same time. A whole nother generation is late to the game trying to look for housing also.
So you're already behind with the millennials.
Right.
You got Gen Z coming up wanting the same exact thing, but they're technically the generation behind.
Right.
They have all this demand.
Correct.
And again, we don't have enough supply. That's been the problem for years and years.
Yep.
Even prior to the pandemic. I don't have the exact number, but I know that we were probably still in technically a seller's market around then.
Yeah.
Because a traditional buyer's market, I think, I don't know, again, number off the top of my head, maybe like 4 to 6 months of inventory is usually what they want to go at, to be like, buyers can go out, look at 3 homes, take their time. Even if all 3 got scooped up, next week, go look at 3 other homes, take their time, and they can buy what they want or like what they consider to be a fair price based on where the market is. In certain neighborhoods, especially like inner suburbs, as we all know, there's nothing for sale, and you have all these people looking to buy.
Yeah.
Because they're like, I'm just at that age, I'm getting married, or I am married, I'm thinking about kids, I have a kid or I have kids, I have 3 dogs, like whatever they're looking to do, they want to own real estate. And because of that, they're looking in these areas, and as soon as something hits the market, they're like, let's go flood this thing and see what we can do. And, you know, you've been out to these crazy open houses with like 50 cars on the street and people waiting on the lawn for their turn to go in. You got like 2-3 agents running the open house.
And who's doing it with them? Their parents.
Exactly.
Yeah.
And
true.
If you go back to 2016, you remember, like, first mom and dad's answer to this is like, well, I'll give you an extra 25. Go over 25. And then we went up to 50. And now we're still kind of floating around the 100. I'm seeing people get houses with 100,000 over asking.
150.
Certain parts of Wayne and, all over Chester County, the main line, depending on the school district. And that generation Z and that millennial generation is the $1 million listing generation, right? So they've been nothing but force fed over the last 20 years. Interiors, like when we were growing up, it was like Robin Leach.
Right.
Lifestyles of the Rich and Famous. We got to get a peek inside of the house, and we had to find when that show was on to watch it. Now they are getting hit with it. Then they're getting hit with Pinterest over the head, and then all the TikTok videos and all the other stuff. Like, everything's about what style of house you live in.
Right.
So now we've entered into this crazy time where people are, buying a $2 million house and doing a $2 million renovation.
Yeah.
And then they're shocked when they're like, why is my insurance so expensive? Yeah. Well, you spent $4 million on that place.
That's why.
And if it lights, and if you like burn it down with a candle, it's going to cost you $4 more million to put that house back up.
Sean, what's the deal? My rate went up like $10 a month. Can you work on this?
All right. So based on all that, Rob, like, what's your opinion of the market today?
So
what do you think the market's like? I
still think, and keep in mind, I do business here. I also do business to shore. I have an office in Avalon and Stone Harbor with partnership with Purdy Real Estate down there. So I have my eyes on both those markets. And here in Philly is still benefiting from its proximity to New York, DC, Baltimore.
Correct.
Those are still very expensive places to live with great paying jobs. And people are like, the back to work thing is affecting a little bit, but most people back to work that I'm hearing is 1 or 2 days. And like, well, I'll commute down for a day. I'll spend night in a hotel.
Twice a week.
But I want to live in Philly. I want to raise my kids, send my kids to this school. So I still think buyers here are very strong, and there's still a lot of
demand
movement to go to get Philly. Like I always tell people, I think if you go back in time to the year 2000, once Boston finished the big dig and in 96, that Matt Damon and Ben Affleck came on the scene with Good Will Hunting, all of a sudden you just started knowing Boston everywhere. It was in every movie. And everybody was talking. Saturday Night Live. It was having this
Boston was hot.
It was having this huge movement.
Good sports.
Good. Everything got good. Everything. All of a sudden, and Philly's in that moment right now.
True, we do have good sports.
Our accents on all over online. Always Sunny in Philadelphia. Everything. We're in that Boston moment. So Boston is an expensive place to live. Boston used to be a place that people would pass their houses down in order to, if I was a firefighter and my son's a firefighter or a police officer, I got to keep them in Boston. They got to live within the city limits. I got to pass this house down. Yep. Not going to cash out on. It could be worth $1 million.
Right.
What can my son borrow? All right, we'll get that money and we'll maybe go to Florida or go do something like that.
Right.
So I think Philly's in its moment right now.
Yeah, it's a really good point.
And I don't think it's going to necessarily have any type of decline. We have such a good diversified major employers. I always call them the old factories, right? So, once the car companies left Detroit, who'd it leave?
Yeah.
Right? Not a lot. But here we have Vanguard out in the suburbs. We have Comcast downtown.
J&J.
Yeah, we have
Merck.
big employers, we're diversified, just like I talked about.
You know what? Not to interrupt, but do you know what one of our largest industries now in Philadelphia is that wasn't maybe say like 20, 25 years ago?
Universities?
Tourism. I think it's like number 3. I think we're like manufacturing, maybe like finance, law, and then tourism are I believe the top three. Don't quote me on that, but somewhere around there.
Dylan?
Tourism's in the top 5. Dill, check me.
Check at the end of this.
Yeah. Go to Wikipedia. But all right, so that's where it is today. I would agree with all that. Where do you think it's going? Like, let's look. Okay, we got a big election coming up, and we were just talking about this. Hey, elections, they get people all juiced up and they're arguing back and forth how it's going to go to hell if it goes this way. It's going to be amazing if it goes the other way. Election years, though, throughout history don't necessarily make or break economies. You had said something about events, like an event will make or break, like the pandemic.
Wasn't it more of a thrust?
Was an event. 9/11 was an event. 2008 was an event. The dot-com bubble that burst at the end of like the late 90s, that was an event. Like, where do you think housing is going?
Well, we're coming out of the lawsuit.
Yep, the NAR lawsuit.
Right, the NAR lawsuit. And what I think that's about versus what I hear through where we consume our information as real estate agents, right?
Exactly.
I think the lawsuit was about data. Okay, so
I don't disagree.
Right. So what people don't realize is that since 2007, when iPhones were invented, right, everything became about data. Google, we're capturing your data. Apple's stealing your data. Everybody's taking data. And what the drum beat you hear out there is all real estate agents do is unlock the door.
Right.
Or write up a contract. Why are you paying them so much?
Right.
Well, hey, fellas, what's not being told is that since like Windows 95 was invented and whatever the first web browser was back then, we've been compiling data on housing. And it's so good and so reliable that the entire banking industry lends trillions of dollars, Fannie Mae, Freddie Mac, Ginnie Mae, on our data. And we don't build a wall around it. It should be in Fort Knox. It should not
it's
be.
Free.
It's free. If I had my way, I'd have Zillow Dark tomorrow.
Yeah.
I shut him down.
Got it. Yeah.
I'd say the reason why the guy, why should I hire you to sell my house? I know what it's worth. I just look it up on Zillow. Like, yeah, you want to really do work?
Right.
Go dive into the public courthouse records and see if you can dig up all the information you need on why this house actually sold for $1.2 million.
Exactly.
And have it so easy at your fingertips that you're able to do it. This whole opening doors stuff is just, it's nonsense. And it's like, it's what we have. It's the world we live in with the social media that like someone can just beat a drum and it just echoes.
So wait a minute.
Repeated.
So go one step further. So if you're saying it's about the data, how does that?
So class action lawsuits take tremendous amount of money to actually get one off the ground. So if you were suing your agent because you didn't want to pay your commission or something happened, whatever, that would just get settled.
Right.
It would never make it as far as this made it.
That took like 4 years. The Sitzer case, I think, was about 4 years.
Yeah, but somebody was funding this.
Yes.
Right. So on the street, you hear about, and I don't want to name companies. I don't want to end up in. I don't want to end up being silly. But the idea is somebody's trying to disrupt the market. Somebody's trying to disrupt how we do business. And in order to do that, if you bankrupt us, they're going to be like, they don't even know that like that data is worth $1 trillion or because we're this MLS and I got a different MLS at the shore. Ocean City's got its own MLS. Yep. There's all these MLS scattered all over the country.
Yeah, it's like 100, I think there's like 150 or so or 125.
And it's like gold, stacks of gold sitting in all these places. And they're not really watched by anybody who knows that they're watching. So, like the door's unlocked.
So your thinking is that was put into motion to submarine and take down
NAR?
The big real estate,
how we do business. Yeah.
So that if they go down, then the data is just left in the dust for us to then
up for nothing.
Yeah. Well, think about NAR.
Someone into bankruptcy.
So we've talked about NAR before.
Hold on. That's probably if we threw out all of these different ideas about, why this occurred.
Why it happened.
I mean, that may be the most sensible.
Well, I mean, like here's
You're from 30,000
Yeah.
feet. You just
Right.
say, why does something
It's like
happen?
checkers and chess, right?
Yeah.
Like someone's
Right.
in the background here that like sees this pile of trillions of dollars of money
Right.
not being utilized or thinking I can use this a lot better and value to me is this. So I'm going to work behind the scenes to try to make this happen and become available.
So think about NAR's, let's call it their power, their leverage. Largest trade organization in the U.S., largest lobbying organization, and they got their asses handed to them in this case. And now there's kind of like a back and
By
forth.
who?
They're the class action suit. They
I know,
lost.
but but then by who?
Yeah, exactly.
And why?
And NAR, because we talked about this in the Realtor episode, you have NAR, the National Association of Realtors. Then you have state associations, PAR, Pennsylvania Association of Realtors. Then you have regional associations. You got Tri-County Suburban and you got Bucks County and GPAR. So there's all these layers to the bureaucracy of NAR, there's a lot of politics. It's very old. Like a part of the reason they lost, they were bringing out all this old stuff. They're like, you're forcing someone to do this. You're forcing someone to do that. Therefore, we're going to bring you down. That's monopolistic. And they won. And to your point, Rob, it's interesting because NAR, I don't know what it is in every market, but they usually have ownership, either some or all of the MLSs.
Mm-hmm.
And the MLSs control the data. So if you're talking about like our area, Greater Philadelphia, we have Bright MLS.
Mm-hmm.
That is the number one source of residential home data, basically from Harrisburg to DC, like up to like North Central Jersey. And Philadelphia is like in the middle of it. And it's like, I don't know how many years it goes back, but it's a lot of data. And that data is what good real estate agents use to comp homes, to make offers on homes, to comp rentals, to understand, should I buy this house to flip it because my acquisition, price is comping out here, but my ARV is comping out there. Like, you need the MLS for all that. Like, that's what gives you the confidence to make good decisions. So it's interesting to hear you say the data is a big reason why, or the reason why this whole thing kind of went down.
Where they say follow the money, it's like who's the one,
Show me the money.
No, it's follow the money.
Follow the money.
You're right. It's follow the money. In other industries, like
Making fun of money.
we have a lot of friends that are financial advisors, right? And boy, has that industry changed as far as their roles go. Because if you were in the 80s and you talked to a financial advisor, they were stock pickers. They were trying to pick the next hot one. They were maybe trying to balance you out, allocate you, but really that's how you were judged. And then, and the better you got at it, the better you were. Now you look at these industries, and all of their investment data is proprietary. And effectively, the financial advisors get told, like, hey, we're going to move money. We're selling. You should sell this. Like the computer algorithm is going to say, hey, you need to move this client's. He's too heavy here based on our internal models on it. You need to sell this off. And they pick up the phone, call up Tim, say, Tim, we need to reallocate some funds here. We want to move some money to cash. We're going to do this. And that's how they get told. They're more an aggregator of money.
Yeah. They're like curated information, and they're delivering that based on client service to their client.
Yes. Versus stock picking anymore.
Right.
There's computer models and other much smarter people than us salespeople. Saying this is where the money needs to go. And that's, so we could see a similar change like that in the mortgage and the insurance business, right? So, in the mortgage industry.
Mortgage has already turned into more of a commodity since 2008.
Well, and
insurance always kind of has been, at least that I can remember. But mortgages were, again, way different too. Early 2000s, there was overage, there was waiting a day, there was locking, like you could play with it. You could, like the stock market, you could play with interest rates. When I first got in, people were like judging things and speculating and like making money. Like the clients still had what they had. They're like, this is the rate. But you're like, I think the rates are going to go down tomorrow. If they go down, there's some overage. If there's overage there, my bet paid off. The overage goes to me in the house. Like that's what loan officers did back then. 2008 happens, what happens? The entire mortgage industry kind of becomes more of a commodity. Fannie and Freddie came under government control, and the government never let go. Like they still have all that. And
So was it you guys that were responsible for the crash?
no, it was really honestly how business was done. And then also in, what is your role? Like, what's your competitive advantage?
Yeah.
What loan officers became is they became, just like financial advisors, good client service reps. Most of our clients are realtors, just like us. Like a good mortgage person knows like 20 like really productive real estate agents, and their business grows through that. But they service the hell out of those realtors and their clients, which is why they always come back for more, just like a good financial advisor.
So then it
What's up,
becomes
Pete
less
D'Amico?
about the numbers.
It's more of a commodity. You want good service. You want a relationship. You want honesty, integrity. You want someone to look out for your best interests, not making deals and churning through clients. And, real estate agents are only they're slowly going that way now. Like customer service has only really been a hot topic in residential real estate. And you may agree or disagree. I'm going to say in the last like 5-6 years. Because before that, and still today, it's about deals. Who's got the most volume? Who's the biggest team? Who's the hot shot?
Got the Instagram followers.
Right. Who's got the best suit? Who's got the slickest hair? It's like literally like it's a popularity contest with volume, but they don't tell you about what was their net, what was their customer service rating on Google reviews. Like they may be the highest in volume, but if they got a 3 out of 5, then they're not very good at servicing their clients.
Yeah.
And now that I see is starting to become very hot topic. Like get your Google reviews. It's about relationships. Take care of your people.
Yeah.
So it's interesting.
But you asked how we got here. You said it was blaming the mortgage brokers
playing
back
with
in the
these
day.
things, overages, and
Well, I mean that's always just a part of the business.
Right.
But in '99 when Glass-Steagall came down, right, that meant banks can now own insurance companies.
Right.
The people
They can
don't-
cross pollinate.
Yeah, people don't realize that the too big to fail, right? When they started to implode in 06, 07, they were only a few years old. They were babies. They never existed in any form. It was banking was separate, investment houses were
like
separate,
AIG,
insurance was not even AIG, like Bank of America,
Countrywide.
Countrywide was actually an independent mortgage company. But
You're right.
But these the Merrill Lynches, the Bear Stearns, the Citibanks, these guys had all were trying to figure out what they looked like once they started getting into the banking world. So that's what really subprime mortgages always existed.
Yeah.
My grandfather was a banker. He used to always say he had a little bit of his lending portfolio that he could lend to the guy down the street up in Rising Sun Avenue in Northeast Philly and say, I know these guys' numbers. I can make this loan. He had an exemption rule.
Yeah.
Once the investment houses got into and got these banks, they're like, what's this?
Right. You
We
wrote this dude a loan for what?
We can get in there, and then someone else from the said, "Oh no!" And we can collateralize these and turn them into other stuff and sell them off to other
Package 'em
people
up. Yeah.
and insure them and make all this money this way.
Yeah.
All of a sudden, that jumped the market up. So all the growth that I saw that helped me buy my big house and buy all that stuff in there, it was manufactured out of nothing real.
Artificial.
No real.
Yeah.
No. Back to this, right? No real force behind it that said this. It was just. It was credit, right? And then the mortgage people took the blame on it because they were somebody was walking into their office saying, and the Big Short did this perfectly, like, yo, we'll pay you $22,000 to do this mortgage. Yeah. Or if you can get us with this kind of mortgage.
Well, the scene with Carell when he's sitting at the table and this guy's explaining how he packages up these things and he's like, the AAA with the A minus and the B's in the scene. Like, he's like, his mind is just melting down.
Too Big to Fail and Big Short were both very good movies.
He's that guy over here. The guys on the street were the two mortgage brokers who were like, I don't know, I do like 10 of them, make about $50K a month or whatever. And you're going, they were doing literally no work. There was no actual skill in underwriting these programs, right? So now we're in a world where everything's pretty vanilla.
Yeah.
Right. So we're in a margin world now. Right. And so we're competing on margin. And because back in the day, servicing was always a problem. So you'd create Countrywide would create a mortgage, but they would service it. Because they own the servicing platform.
They make money off the interest every month.
Mr. Cooper.
Mr. Cooper.
Right now.
Hanging with Mr. Cooper?
So now
the bane of my existence in the insurance world.
You remember hanging with Mr. Cooper? Of course you do.
So that's how that rule created these banks that had no idea what they were doing, really what they were. I mean, Travelers was owned by Citibank at one point, right? Yep. Travelers, if you look, you always have a different underwriting company because back in the day, insurance used to be ignorance is bliss, right? It's 1980s. I like the zip code you live in. Okay, Lower Gwinnett, that's good. I like your name, right? And they're like, okay, this is how much we're going to charge. The actuaries had an easy job.
It was like 13 rating factors.
Nothing.
Then.
right? And then credit reports come in, then insurance scores come in, right?
Yep.
And then the iPhone comes in and Google Maps, and everybody is really tracking you and telling you exactly how fast you're driving, telling them, right? And now we're in this mode where insurance companies used to bring in $1 and pay 90 cents in claims. That was a good insurance carrier.
You're making money.
And back before the 80s, maybe there was just one insurance company in Philadelphia that underwrote a lot of people, but now they all have exposed risk to people in Florida and people in California. It's all spread out, right? And they, over the last 3 years, they literally did not know how to price losses because they have too much information, right? They're getting too much data. They're having AI look at trees and roofs from space, and no human could ever have enough time to review all these roofs, but AI can.
Yeah.
And so now they're going, well, don't write this, don't write that, don't write this. So they need to go through their own little adjustment here and be like, you know what, we need to move back a little bit to ignorance is bliss, where we don't maybe want to know how fast Rob drove on 202 to get here today.
Right. And we know it was fast.
Right, because we were tracking his phone. Google Maps have been selling his stuff forever on it. You see what I mean?
All right. So the cars are plugged in too. Before we even knew the iPhone is, once these cars got these devices in there, I mean, they've been sharing that information with insurance companies for a long time.
Yeah, but the insurance companies have no idea now what to do with all this data.
Well, inflation, when plywood quadruples in a year, you can't really get rate on that to sustain.
Yeah, well, I think that people blame inflation for a lot of things.
Yeah,
but the Texas ice storm in 2021 was the biggest problem facing all things inflation. So a friend of mine works for a company that sells chemicals, cleaning chemicals, calls me up because I just got called into an emergency meeting. That ice storm in Texas is going to screw things up. He said that when the power was out in all the houses, right? Because this ice storm came out of nowhere.
Yep.
Houses were out of power for 5 weeks, right? That refinery was too big to fail. Had its own power plant.
Yeah.
They had to reroute power to housing because people's, their wells weren't even pumping water.
Yeah.
So that went offline for 5 weeks. That refinery needs to make so much petrochemicals that they ship all over the world that, we don't realize that we can't get a plastic bag, or we can't get paint for a car, or that little sensor. Someone just rear ends somebody and gets a little damage, but that little sensor has chips in it that we can't make. And that brand new Ford Expedition can't be fixed for 6 months.
Right.
Because the car can't even be deactivated. The car won't work without that piece.
Yeah.
And the car is perfectly fine. Yeah. And after a certain amount of time, they have to total cars So they were facing situations that were, it just never happened before. And people blame it on politics or something. No. That Texas ice storm has way more impact on on how you and I did business over the last couple of years than you'd ever realize. Because lumber's return price is returned to normal.
Yeah.
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 I more meant your insurance company paying out on claims. Like we had a house in New Hope, right? And we had it insured. It wasn't a big house. We had it insured for $500,000. They put a reserve on it for $800,000, right? Because you couldn't get contractors in.
Yeah, not enough contractors,
right?
And they're expensive.
And they can essentially name their price because if I'm willing to show up, you have to pay me what I want to be paid.
Yeah.
And then so that cost is up. Your materials are up. So we had that house is insured for $500 total loss. It wasn't even a total loss, and they put the reserve at $100,000. So but
they still paid it.
They did.
Yeah.
So but how do you make that up? How do you recoup that when you take that claim and then
take rate
times it by 1,000? But what if the state says we're not giving you what you want, right? So then it becomes this.
It comes drug out.
Right.
That's why it's been going on for 3 years.
Right. But what
breaks the dam?
Yeah. I feel like we're at a point where it's not, we see hard markets, soft markets, right? We see the pendulum go out and come back, and that always is the normal flow of insurance. I kind of think we're at now a point where it's like that pendulum is kind of just stuck there.
Yeah.
And I don't see it coming back to where it was. I think that pendulum is now
you
going
forgot
like
to wind
this.
your grandfather clock?
Do you know what I mean?
Yeah.
All right, let me shift. This is all super interesting, but let me shift so we can get to some of this other stuff with Rob as
Let's
well.
get some more topics.
Yeah.
Yeah.
Hey everyone, this is Tim, your favorite Bricks and Risk co-host. But don't tell Sean. I hope you're enjoying this episode, and I'll get right back to it in a moment. Our audience grows through word of mouth, so if you would please take a moment of your time and give us a review on the platform you're on, that would be fantastic. Please also help spread the B&R word by sharing your favorite episode with a friend. We greatly appreciate your time and trust. Now, back to the show. All right, so one thing that's said online, let's talk about your business.
Okay.
Because again, when we do this show and we have guests on, we really want to dive into like your business as well. So online it said, you promise a new level of attention, insight, and capability. So with those things, that to me screams relationship.
Mhm.
Like you're looking to, someone comes to you, which also kind of like, it's how your company's kind of packaged the way I see it. It's like, not only do you have those things that you promise, but then when they come in, you're like, look, if you want, I can do your mortgage as well once I sell you this house. If you want, I can give you a quote on your homeowner's insurance and your audit and whatever else you got, you know, when I sell you this house. So you're kind of like, you're capturing the client with the relationship, but then when they come in, you take that triple threat mentality to see how can I service them even more.
Yeah.
Was that kind of part of your strategy? Like when you were starting this whole thing, did you want to do all aspects of like a real estate deal or a business deal, let's say?
Yeah. I mean, when we close a house where one of my realtors sells the house and we do the mortgage and we do the insurance, that's the plan. That's the Trident model.
That's the goal.
Right. And you look at companies like Compass, right? They come out and they hire all these realtors and they're spending money like crazy. But in the end, most realtors take most of the profit out of every transaction. So the Prudential Fox and Roach proved a long time ago that having these other business models is the key to creating value in a business where all we have is ourselves.
Yeah.
Right. Like I could sell my mortgage company, but really who wants it? They want me.
Exactly.
Right. The insurance company has a book of business, has value.
Yeah.
The real estate company, same thing. What if all your realtors leave tomorrow?
Exactly.
There's no value.
Right. Yeah. And I just went through this. So you have an independent real estate brokerage.
Yeah. I
ran an independent real estate brokerage for almost 10 years. One of my partners chose to leave, so the partnership had to end. And I did a podcast interview with someone I know who was running a show, and the guy was like in the tech space. He's like, no, I really want to talk to you about partnerships. And one of his questions was, well, why didn't you guys just sell it? And I said, here's the thing. A couple of years ago, someone came to us wanting to buy us.
Mm-hmm. Rent you.
It was renting us, but still, they were cashing in on our brand equity for building something, for having leadership, for having agents, volume, great Google reviews, whatever reason they wanted a piece of us. They came and said that. We ultimately decided not to do it. 2 years later, the market changes a little bit. It slows down. Then someone chooses to leave. And it's like, look, your only buyers are really like the other two partners, like me and Ryan.
Yeah.
And we got to a point and he wanted to take off. We wanted to do different things. We said, at this point, it makes more sense to just take this brand, sunset it, and then Ryan and I can go, any agent that wants to come with us can come with us.
Right.
And then we're going to go start a team. Because again, like you got ancillary businesses. We do development. So we flip homes, we buy buildings, and we do adaptive reuse, multifamily, things like that. And we're in title insurance as well.
Yep.
Neither of those things changed because those were all relationship based.
Yeah.
And for us, it's like making that shift to your point, like what is the brokerage really worth? Not much unless someone comes to you and says, this is what I want to pay for it. It's just like in real estate. Homes, I say all the time. They're like, well, I got an appraisal and my appraisal said 500,000. Look, that's an opinion of value. Your home is worth what a buyer will pay for it.
Yeah.
If you list it for 500, if that's what your appraisal says and we're in a slow market, it might sell for 450. If an appraisal gave you 500, you're in a hot market, it might sell for 550. So that's what the buyers determine what your home is worth when you go to sell.
Yeah.
And with these businesses, it's the same thing. I've always found this interesting because we've been talking about insurance now for almost a year doing this podcast. And like you had always said, you're like, no, like acquisitions is like the number one way to grow because all these things are books of business that are worth money on paper. These clients, they stay, they're loyal. It's customer service, it's brand loyalty, whatever it is, monthly payment. And you can sell off insurance books. Lending, yeah, same thing. It's, you have your clients. Like, what if all your clients left tomorrow? What do you really have to sell?
Nothing.
Well,
Brokerage, same way.
I think that's maybe where this goes. I mean, we've talked to some people and they're like trying to adapt their business to be a sellable business.
Right. Like
And
a sellable asset.
And I think that's where this, from a real estate and even a mortgage standpoint, it does start to go, because with all the available data and all of the available technology, you can start to think, like, I guess it just never was a part of the equation before.
Yeah.
But I think once like real estate agents figure this out, like, okay, so I don't necessarily have an annual renewal client,
Right.
but it's more like an Instagram. You have like a follower.
You have a following.
Right.
You have loyal people.
And if you speak to that book of business
right.
on a quarterly basis or a monthly basis, and you have their attention,
yep,
I think you can start to like,
it becomes more consistent when you stay in touch.
You're a
with
trusted partner.
Right.
Exactly. Yeah. How has that journey been for you? So again, you did insurance first, then lending, then is it mostly residential real estate? Do you do commercial?
It's all residential.
So if it's all residential, did you ever think about, hey, maybe I'll just start a team with a big brokerage, or no, it makes sense for me to just start the independent brokerage from scratch. I'll be the broker of record. I'll practice.
Well, let's start there, right? So we're a buyer-driven model.
Yep.
Right. So I'm used to helping young people buy their first house. I'm doing 22 years, buy their first house, then help them move up to their second house.
Right.
Right. And, when I did the last round of refinance booms, right, I was kept telling people, like, people came to me, hey, you want to start talking? I'm like, nope. I'm like, we're going to fall off a cliff. I'm telling people we're going to fall off a cliff here. Like save all the money that you're making right now.
Because they were saying, like, look at all these deals, look at all this money that's on the table.
You're missing out on, Rob. You don't own a title company. I'm like, yep. And I'm going to be the first one to tell you that once those payrolls start coming in and there's nothing coming in, we're going to want to lay off half these people. And I don't want to be responsible for somebody who if you come to work for me, like, you got me. Like, I'm in it with you. Like I appreciate you coming to work for me, and I want to make sure you do all the things in your life you want to do.
Yep. Even
if that means eventually at some point you wanting to move on from me. That, you know what I mean? Like, you have to be.
You got to be okay with that.
Yeah, you have to be like that way when it comes to stuff. And
you don't have to be that way. Let's be clear about that.
You should.
But when I'm doing these refinances, I'm telling people, like, oh, you're at 2.5%, or we're at 15-year. I'm like, we're never gonna see you again. Like, joking, like, we're never gonna see each other again.
Yeah.
Right.
This is it. This is it.
Like, stick with it.
So like, you think about
I've had so many people ask me, should I do this? I'm like, no, you shouldn't.
So you think about all those houses that are there that are in 15 years in the 2s or 30, they're all just invisible now. They're just being erased right off the Google Maps because they're never going to come for sale.
Yeah.
Yep.
They're like,
I forget what the
forbidden inventory.
I forget what the percentage is. It's like something like 60 or 70% of all the people who hold residential mortgages in the U.S. are under 5%. Under. So just think of 6, 7 out of 10.
Well, remember you and I were doing it, and you're like, hey, maybe I'll start calling some of these people in like these neighborhoods, just see if I can like turn something up. And people are like, no, like you're crazy.
Yeah. You're not going to be able to.
You want to move up. That's the big move at the shore.
Yeah.
Right. So a lot of the shore agents, with the shore is starting to soften a little bit.
Yeah. I could see that. It should.
Where's that, Rob?
Ridiculous.
That's the shore is my other issue, right? So we bought our shore house in 2004 and I sold it 16 months ago.
Yeah.
Had a great run with it. My kids are in high school now. And so I just we don't have any time.
Yeah. Right. Yeah.
We weren't
go rent. Go do a couple weeks.
We actually didn't even get a chance to do it. We were on college visits this summer, so we weren't doing anything shore related. But again, we were there for 18 years, and
that's awesome.
It ate up a good chunk of your vacation money, needless to say, when you're carrying a place. But what I learned was that there's always calls to be like, hey, you want to try to move into this space. But when the PPP money came out, so many people borrowed that, before July 2020. Okay, so that's the summer of COVID.
Yep.
No house in Avalon that wasn't on the oceanfront or bayfront sold for over $3 million. So anything on the interior streets, anything that wasn't with a front row view to water. So anything in front row view to water, that
Front
has
row,
sold
back row.
over 3 million.
Yeah.
That's the only part we saw a number in the threes or over was on these certain spots that had certain views of water. And in July 2020, all rules came off. It just was just the wheel. I mean, and I actually tracked that market so well that I have a database built that's a 16-page spreadsheet that has, because it's easy to do this when you have a grid system on an island.
Yeah.
You can
numbered streets.
you can actually turn the blocks into, and so I broke it up into 16 different categories. I said, this is a neighborhood, this is a neighborhood.
Oh, wow.
So down the shore, I can actually predict what houses will sell for based on what they're currently being marketed for now. And when they flip into this closed transaction, I can tell you if they started, what the price came down to. And actually, when they're in active mode, I can say that house is going to sell for this number.
Wow.
And so actually, other agents at our office down the shore actually call me now.
Rob, what's the number?
They give me the address.
You got to talk to those NAR lawsuit people. Be like, yo, I got some straight up data on the South Jersey shore.
But while we were slow, I built it.
Yeah.
Right. So we're slow. I'm like, all right, I want to become the expert on
That's cool.
this market. So I know exactly what things are going to sell for. I had a family, my son goes to Malvern and my daughter goes to Episcopal. And, lots of families there own places down there.
Yeah.
And I've had them come up to me and, their house is listed and it's not selling. And I'm like, well, based on my model, it should be at this number.
Mm-hmm.
And then like a few weeks later, I see it drop down to my number and I'm like,
nice.
Good. But someone else is listing it.
Right. That's great.
So
very cool.
But at least that they're listening to you.
All right. So here's another one. I'm going to shift again. One question we like to ask, because again, we've talked about some positive things.
iPhone.
Yeah. Yes. My boy. I didn't even have to ask it. He knew. Yes. You're the man, Rob.
Absolutely.
All right. So, no, I wasn't going to ask that, but I do love that you dropped that answer for my other boy right here. The biggest struggles is, right. biggest struggles is one of the questions we started asking. My brother Ryan, he can be like Mr. Mooney here a little bit, glass half empty sometimes, which is good because it gives you perspective.
Yeah.
Like I'm very optimistic. I'm very glass half full. So one of the questions we asked, what are some of your biggest struggles? And you said finding time and saying no. Why do you find those two to be, kind of hard for you?
Well, when I first got in the business, mortgage person at Remax, I was 22 years old, 22.
Yeah.
22. I was a baby. Everybody thought I was older, right? Because I carried myself a little bit older. But I used to say, if you want to be paid like a doctor, you got to be on call like a doctor.
True.
Right. But unfortunately, that's a hard habit to kick.
Mm-hmm.
I still have realtors right now who give out my cell phone and a client will text me at 10 o'clock in the morning or 10 o'clock at night. And I'm going, looking for a pre-approval letter. And I'm like, a Saturday night, 10 o'clock. And I'm like, I've just recently started being like, no, I'm not responding to that person. And it's like worst possible time for business. But I'm like, I just have to start somewhere. Like I got to set boundaries up. And I don't think this guy's going to use me anyway. I think he's only using me for the letter. That's a big problem I'm having right now.
We're trying to just get a quote, even though all the quotes are going to pretty much be the same.
Well, most of they should be almost all exactly the same.
Because all come from the same spot.
All from the same place. So it's like, yo, I'm giving you service and you're still going to go use the guy who won't take your call?
Right. Exactly.
It's a kick in the nuts. I don't know other way to describe it. And they're like, well, and the realtors are like, well, you always help me. I'm like, yeah, I get it. When the volume was through the roof,
right?
I could be there at any point in time, but I know that you're not writing a deal at 10 o'clock at night. That's not going to go to a listing agent. It's going to sit and be compared to 5 other deals. This time of the essence it's not 2006 where they're like, we're going to get a deal done at 10 o'clock at night on Saturday. Yeah. We're not taking offers till Tuesday. I actually find that kind of refreshing.
It is. Yeah. You're kind of like, cool.
There's actually some boundaries in the market.
We talked about this. Remember when we had Ryan Petrucci on?
Yep. Yeah.
And he's he's a listing only agent.
Yep.
And he had to train himself. We talk about this training, right? So going
mindset,
boundaries or whatever you want to do, is he had to turn away business, buyer business to find his way into what he wanted to do, listings only,
Yeah.
But it's similar. It's like you've been doing this for quite a long time, right? I like to use the phrase, I don't need practice quoting insurance. For some people that I'm like, I know that I'm like one kind of like spoke in the wheel of like 6 different people that they're going to reach out to is like, I got stuff to work on. I got clients that are doing business with me or, want to do business with me. I know that I'm going to be writing the insurance.
Yeah.
But at the same point, when you have like referral partners that you have a relationship with, I think it's more important to be speaking to that person so that they're aware of like, okay, well, if you set them up in the right way, in the right manner, then it becomes kind of, listen, here's Rob's information, or here's Sean or Tim's information, give them a shout tomorrow. But maybe it's harder in real estate because of the market right now and what they're, if they're onto a deal and they're trying to get it done, then it's a fine line to walk,
Yeah. And margins are squeezed.
Yeah.
Like we had a deal come, one of my agents works for me, had a deal buying Westchester, and he sent me the IFW from their current broker, and the broker was making less than 1% based on the market. And I said to the realtor, I was like, even if I beat this and I go down to a 0.5%, what am I doing?
Right.
Like, and another realtor sent me, a guy calls me up and says, hey,
can you explain that? Like for some people?
Yeah. Like, so when you place that mortgage and you go to lock it, it's supposed to make a margin. The industry average is 2%, right? That's what most places are trying to make.
Yeah.
If you're a big Rocket Mortgage or one of these big guys, big servicer guarantee rate, they have even a bigger ability to make margins, bigger numbers, because they have buying power in their rates, and they're servicing their own loans, and there's more premium coming back.
Yeah.
Whereas we use different banks that give us a certain amount as a brokerage, and
like offset.
Yeah, like I when someone sells a rate and I can see the down payment, I know the credit score, I'm like, I know I can go out into the marketplace and price what they're making on that loan and assume if it's a bigger company, they can make a little bit more.
Yeah.
That's fine. I don't have any of the expenses, so I'm pretty mean and lean on my margins. Like my first rate to you is going to be like the best I can do. I don't want to get into one of these, someone's going to quote you an eighth low or whatever. I just want to be like, yo, this is what I know I can do for you. Here it is in writing. Usually if they call somebody else, they're like, yeah, your rate was lower. I'm like, yeah.
Right.
No shit. Like that's what I'm trying. That's what I'm trying to do here.
Trying to win your business,
That's great.
I don't want to get. I'm not a car salesman. I don't want to get into like, let me go check with my manager. No, it's just like this is who I am.
The deal.
Yeah. And this guy called me up and said, because I still have other agents that work at Remax and other places that use us for mortgages and services because
relationships.
We have good service, like
relationships.
And he said, oh yeah, she gave me 4 names of 4 mortgage people she works for. So I want to see which one you guys think the best. I go, I'm out. And he's like, what? I'm not giving you anything. And I called her up and I said, listen, I'm like, don't give out my name and then tell him to go search somewhere else. Don't give him 4 people because you're going to make all of us starve.
Right.
Yeah.
Like that can't happen. I don't want to know that this guy who I know who works at a different company who may not have other revenue streams that I have is now even cutting it more. Like that's where I think we're heading. We're going to head to just a lot less people.
Yeah, that's what it is.
Agreed. Yeah, there's not going to be these big brokerage houses with 120 agents at it like Remax Action was.
We're at 1.5 million realtors right now, somewhere around there. I think it's probably a lot less. We went down. I think we thinned out down into like the $800,000 range, or $800,000 realtor range, maybe at like 2012. Mm-hmm. That took like 3-4 years to thin out from like 2008, 2009. So it's going to drop off.
Yeah.
First of all, there's so many people who do it like 1 or 2 deals a year.
Right.
Like more than half of all realtors in this country do about 1 to 2 deals a year. Right. More than half. Actually, the stat was about 50% do 0 to 1 deal a year. So they don't even do one whole deal. And I'm not saying that to be rude. I'm not saying that to be opinionated. I'm saying that's the fact because it's cheap to get your real estate license. You're chasing a dream. You go to some shop and they promise you the world and you don't know how to run your business and you're not consistent and you just think it's going to come to you because you're you. And that's not how it works.
And it's cheap to use MLS.
Exactly. And I think right
maybe
now
it shouldn't be.
Right
maybe
now
it shouldn't be.
Yeah. I think a lot of the low barrier to entries in real estate are what cause a lot of its high rate of failure because people can easily get in, they can easily get out.
Yeah.
All right. So one last one for you. Your quote, which I thought was really good, interesting. Opportunity is not a lengthy visitor.
Yeah.
Why'd you share that one?
Believe it or not, over the summer, we took my son to Syracuse. I had never been to Syracuse. I didn't even go on college visits.
Don't go in the wintertime.
I partied there.
I did actually say that
one night on the way to a
really?
bachelor party.
Oh, you've been there once?
I've been there once. One night on the way to a bachelor party in Montreal. We did pit stop in Syracuse. It was pretty fun.
Yeah, it's a pretty special place. And we were there in July, so everything's green. So I say to my son, Brandon, I'm like, just let you know, it ain't going to be like this. This is the only time you're going to see it like
4
this.
months a year.
This might be 3 weeks a year. I don't know what it like gets like up here. But another parent told us it's actually getting a little warmer up there because like the climate's kind of shifting. Yeah. People are saying that we're like a Richmond here in Philadelphia. We have Richmond's climate now.
Yeah.
Because part of the reason why we're back to profitability insurance is that we had 700 some odd days of no snow.
Yeah.
Mm-hmm.
That
big time.
That saved us.
Yeah.
People don't talk about that enough.
Well, and the tornadoes and hurricanes, over the last couple of years have been
quieted down a little bit. But that was on a bench.
Oh, that Syracuse. Quote?
Yeah.
No way.
Someone wrote it? No,
it was on someone donated the bench and put it right there. It's right outside the admissions office.
You saw it and you read it and it just hit home with you. Why did it hit home with you?
Because it's true.
Yeah.
Right? So as a business owner, we always sit here and like, what do I need to be doing? What do I need to be doing? I had a friend that, I don't know if you knew him growing up, but his dad owned a restaurant. It was his family had owned it and it was pretty successful. It was in Montgomery County. And he said to me, his dad has not passed away, but his dad lost the business. And I said to him, what happened? He goes, my dad, he was out playing golf when he should have been reinvesting in his business. And when I tell you that stuck with me.
Wow.
Right. So we talk about being a buyer driven model. I've always been a buyer driven model. There's always been plenty of buyers.
Right.
But in the last year, I've switched to like heavily marketing for selling leads. And that's, where I'm now taking the lead role, where I always had agents that worked for me that really were great with buyers. I call them like, they're almost like, you go to a car lot and you meet a dealer's guy in the lot. And he just takes great care of you.
Mm-hmm.
Right? You're just like, that's what if you're a car dealer.
Customer service. Yeah, like the front line.
They walk you through the process. They sell you the car you want. You get a good, you know what I mean? Like that's how a lot of my agents that work for me operate. Like they're very good at when I hand them a warm lead.
Everything lines up.
They take such good care of them. People love them. Yeah. People talk it's fantastic. So as a business owner, I want 5 of those guys.
Yeah.
Yep.
Right. But as far as getting listings, that's where it's a little bit more challenging, where you got to put your kind of self out there. You have to kind of be the face and say, I want to list and market your property.
Yeah.
It's
different.
It's very different.
Different level of credibility. It's funny.
And I never valued it because I was like, I want buyers.
Yeah.
Because my model feeds buyers. But right now that's changing.
Buyers, I found personally to always be a little bit more rewarding because they're trying to get to somewhere. Like, I'm here now. Here's where I want to.
If I'm selling, I'm trying to get to somewhere.
Yeah. Here's where I want. Well, you'd also be a buyer. They want to get to somewhere. Sellers, there could be a life event. They could be older. They could just say, hey, I'm cashing out this. I want to go buy something else. So there's lots of different reasons why people sell. And again, working with any client in real estate, buy, sell, rent, invest, it's all rewarding. Buyers, though, especially first-time home buyers to me, were always so much fun because having all that knowledge and experience and believing in the relationship, you're just there to give them what they need so that they can make very good decisions for themselves. But they can ask you or me any question they want. 99 times out of 100, we're probably going to have a good answer for them. The 1 out of 100 is probably, okay, I got to go talk to an attorney, or you got to go talk to an attorney because this is outside the scope of like normalcy, let's call it. But yeah, I've always found buyers to be fun. I've always run, probably about 60-40, 60 listing, 40 buyer. I work with investors. I work with landlords. Like I do everything based on relationship. If someone says, hey, I got a single family house in Philly. I want to rent it out. Can you help me? Of course. I probably sold them that house.
Yeah.
Or it's like, I've known them for 5 or 15 or 20 years and I just want them to be taken care of. So I really appreciate you sharing that quote.
I take it a different way. So my big thing in life is like, there's going to be like one life event that is going to be like put in front of you and you have to get it done and get
opportunity is not a lengthy visitor.
Yeah. Like it's here and gone.
Yeah.
And so when it does present
you
itself,
seize upon it or
that once in a lifetime opportunity could be gone.
Yeah.
Agree. All right. Before we shut it down, this was an unbelievable conversation, by the way. Really appreciate all your insight.
Thanks for having me on.
Why don't you share with the audience, listeners and watchers, where they can learn more about you and everything you got going on?
Yeah, well, obviously you can reach us, via our website, right? northpoint360.com. You can always reach out to me directly. I do love walking people through the home buying process.
Nice.
Like that is my, like I can spend 15 minutes if you want to be fast, or I can spend an hour with you on the initial consultation.
Right. Yeah.
I'll walk you through what contracts look like, how the market is, people are reacting. I'll share thoughts of go ahead.
Will you share your Excel spreadsheet if people are buying down the shore and they reach out to you?
No, but I will show them, I will sit down with them and show them on my computer, or I'll do a Teams.
What if they want you to buy the house with them? Like
They need to pay a monthly fee for that.
Yeah,
bro.
that is proprietary, and I won't even share it with the other realtors in the office. They give me the address, I plug the numbers in, and I give it back to them. I don't even. It does not.
I love it.
It does not. I mean, it took a long time to build, and it's accurate. So I'm very confident in that. But that part of the process, I really do still enjoy. It's a lost art right now because buyers, we're telling people to, you have to waive someone else waived their home inspection. Someone else is waiving their mortgage contingency. The crazy stuff that's happening right now is like, at what point do other realtors just say, we got to stop this?
Stop doing it.
Like but it's just not there. It's not being taught by the KWs and some other places that are just like
deals,
get paid. It's like, sometimes you got to eventually say, who do I want to be? And who do I want to work with that's going to like say this is, and that's the most challenging part of this market right now.
It is, yeah.
Where do you fit in?
This exact conversation was when we had, what's his name that we just did? The name I can't pronounce, the last name?
That's Schuck, Schuck.
No.
Pretty easy, man.
No, the guy with the podcast, the
First name Robert.
The 210.
Oh, you're talking about Garrett Maroon.
Oh yeah, that's right. I was thinking of someone else. But like,
could you please let him close it out and share his information? Dear God.
You can always finish. You can email me. You can call me. I don't.
Email, LinkedIn.
Yeah, put it on the bottom of the screen. Should be right here.
Float it through.
Yo, what? All right. So now that he's got that out, what do you want to say, bro?
No, it's like finding what you want to be, right?
Yeah,
like,
true.
Do you want to be the deal guy? Do you want to be the relationship guy?
Yeah, it is. Find the path that suits you best. There's nothing wrong with focusing on deals if that's your business model. You just got to know what lane you're in. All three of us just happen to be more into the relationship lane, and it's like that's why we've grown independent businesses from scratch. So,
but let me close you out with this.
Yep.
In 1995, there was Fox and Lazo, Emlyn Wheeler, and then there was a big Prudential office downtown. I'm pointing to Philly.
Right.
Philly's in that direction right now. That's where I'm heading after this.
Yeah.
And the market was slow. We're coming out of the recession in 94, I think it was, right? Yeah. And someone came up with the idea, is like, you know what? You guys should merge all these groups together.
Yeah.
And Fox and Roach sold, I think, for $600 million. Yeah,
to Berkshire.
And I feel like right now, us being in our 40s, we might be at one of those opportunities.
Yeah, one of those moments.
So when you reach out to me and say, right, want to come on our podcast? You know what I mean? These are the little things when the universe starts to speak to you.
Totally.
Listen.
I love it. Awesome, man. Thank you. Well, that's all we have for this one, folks. Thank you for tuning in again to another episode of Bricks and Risk. See you soon. Thank you for joining us on another episode of Bricks and Risk. Our goal is that you walk away with 1 or 2 valuable nuggets, and we greatly appreciate you sharing your time with us today. You can find all BNR episodes on Spotify, Apple Music, YouTube, and anywhere else you get your podcast content. Until next time, keep learning and keep growing.